Wow, that was some disappointing data on the consumer that we got today. It is Friday, August the 14th, and this is Markets with Megan. If you like this podcast, you can subscribe, hit the alarm bell, share it with your friends, family, colleagues, anybody who likes to read the headline news that we get from all the economic data, what it means for the markets, and what does it mean for the future for your investments. So today we got a couple readings on the consumer. We got the July retail sales, and this was a big miss. The expectation on the headline was that it would rise 0.2%. It actually fell 0.3%, and that's following a decline of 0.2% in the prior month. We do know that a lot of this is impacted by the up and down we've seen with the prices of gasoline, but the controlled group, which takes out food, energy, gas, and building materials, this goes directly into GDP. That actually fell 0.4%, and that was and the expectation was actually for it to rise for the month at 0.3. So when we dig through these details with this report, it's important to realize that there was some give back. If you look at it, Prime Day for Amazon, that was pulled forward to June this year. Typically, it's in July. So we saw a pretty big decline in non-store retailers, about 2.2% for just the month. So that was a big pullback there. Also, motor vehicles declined. So did recreation, and then just overall internet sales as well. So this has some to do with consumers being a little bit more concerned about what's going on from the future as far as the business conditions, the inflation environment. We did see some pullback in spending, but it could be also heavily impacted, like I said, by that pull forward of Amazon Prime Day. One of the discretionary items that we like to look at is consumers going out to eat. So the eating and drinking places, that actually increased about 0.5%. Now, these numbers are not inflation adjusted, so it's hard to tell how much of that is absolute increase in more spending on restaurants, or if that has to do with restaurants raising their prices. But regardless, that did have a pretty solid move. So there still is some, I guess you could say, something left there with the consumer and their ability to spend. But then we also got the preliminary reading on consumer confidence today, and that dropped for the first time in 3 months. Consumers are very concerned about the current economic conditions and also that inflation continues to be a problem. So regardless of the numbers that we got this week with inflation, consumers are not happy about it. And we've talked about that even though the pace of inflation may slow, it doesn't feel any better for consumers. It's still rising. It's hard to tell a consumer that inflation's going down. It's not going down. It's just rising at a slower pace, but it's still rising. When it comes to inflation, one of the things we look closely at is what consumers think about inflation, because if consumers think that inflation is going to increase more in the future, there is a tendency they may pull forward buying because they're worried about prices in the future. And what that does is create a vicious cycle around inflation and just actually could ignite inflation in the short term. We saw the one-year inflation expectation from consumers rise to 4.3% versus 4.2%. That's not a great number, and the Fed needs to take a look at that. Also, the 5 to 10-year expectation for inflation, it didn't change. It stayed at 3.3%, but 3.3% is a far away from the Fed's 2% target. So what the Fed's been doing over the last 63 months is not working. Inflation is a problem. We think they should raise interest rates in September. However, the data might give them a little leeway to wait. We'll still have more data before their meeting. We'll get another labor market report, and we'll still get their PCE indicator as well. So we'll stay tuned to that, and we'll be back with some more. That's all that we have this week. If you want to share our podcast, you can go to marketswithmegan.fm.